A very good afternoon to you and welcome to today's edition of Masterclass. Masterclass is powered by Joy Business and is brought to us today by Goyle. Goyle Good Energy, Goyle Yenara Yedia. Masterclass comes your way every Wednesday at 1:30 p.m. and runs all the way through to 2:15 p.m. here on your superstation Joy 99.7. My name, as always, is Yaw Anim Barnafo, and I'm glad to be your host for today's edition of Masterclass. Just like I mentioned last week, today's show is one that will also bring some kind of mixed feelings because today's show will be our last show for the year 2023, the business year 2023. But we'll try and bring you as much information, continuing our conversation on taxation as much as possible. Last week, we were talking about taxation and your businesses. We talked about personal reliefs. Today, we'll try and talk about some reliefs that corporate businesses like yourself can also enjoy from tax. Tax is not only taking away from you, but we're sharing information here that suggests that if you didn't know this before, there are reliefs that you can also access as a business entity, as a corporate, as an SME. There are reliefs that you can access. But just by way of a quick recap for those who missed a show last week, you can go to our Facebook page, My Joy Online, and watch that show. But otherwise, here are some three quick points that I gathered from the conversation last week. And the first one is that there are personal and corporate tax reliefs, and under personal tax reliefs, there are upfront and other reliefs. The second thing I learned from that conversation that I took away was also that personal reliefs do three things. Number one, they help the individual to reduce their chargeable income and personal income tax liabilities because you get credits when you file and you access your benefits, and then you can use that to reduce your liabilities. The second thing also is that it provides savings to the individual taxpayers, which enhance their cash flows, again because of the reliefs that are available. And the third thing is that it also helps to improve the culture of compliance. The third thing I also learned are examples of personal reliefs, and we learned that some of the examples are marriage or responsibility reliefs. Yes, if you're married, there are some reliefs that come to you. If you missed that show, you can pick up that phone and give us a call and get interactive, or you can watch the show from last week. If you've got a child who's in school, there are child education reliefs. If you are taking care of someone or you yourself are disabled in any way, there are also disability reliefs that you can accrue or can accrue to you from the tax process. There are also old age reliefs. So yes, a lot of people are now taking care of their parents because they are at that stage where the parents are elderly. Again, the tax process also has some reliefs for you. And we also have aged dependents. So the old age relief is for people after 60 or so. And then the aged dependents are your parents or your dependents you're taking care of. So yes, there are some reliefs available for you. Today we continue with that conversation. Someone who I almost want to call a friendly taxman. A friendly taxman is here in the studio with us again, Dardey, who's the Associate Director for Tax and Regulatory Services at KPMG. Good afternoon, Gordon. You're welcome back to the conversation.
Good afternoon, Yaw, and thank you very much for having me once again.
Indeed. We're excited to have you
in studio.
We're excited to have you. I know that you have a lot of information, but today is also our last show, so we'll try and get in as much information as possible. Yeah. For those who are watching us, we're streaming live on Facebook. So if you're not driving and you want to watch the show, by all means, do go to our Facebook page and watch us. Gordon has also obliged us some slides. So yes, you can also follow us and pick up some notes for those who also want to take some notes. Today, again on the show, we'll be giving away some fuel coupons to 2 lucky winners by courtesy of Goyle. Goyle Good Energy, Goyle Yenara Yedia. If you want to buy fuel for your car, let Goyle be the first choice that you make. Today, they're giving away 2 fuel coupons to 2 lucky winners. When we get interactive, we'll open the phone lines. Pick up that phone, give us a call, and you just might be a lucky winner. But let's go straight into our conversation. Today, we'll be looking at corporate reliefs, essentially. Yeah. And if time permits, we'll do a few tidbits or highlights from the budget that was read a week before last. Gordon, talk to us.
Thank you all once again. And thank you to all of you, our listeners and our viewers, for always joining us to learn and also to discuss taxation in Ghana. For the past, 3 weeks, we've discussed taxation in Ghana. And I'm grateful for the team in KPMG who have supported me all this while to prepare the slides and also come in studio. Today I'm here with Iman Rasari. And this will say thank you very much, Iman, for coming. And also to all the people who have always listened and called after. We are grateful to you. So today we'll look at, as Yaw said, he went through a recap of what we did last week. Last week we went through the personal reliefs, and we saw that reliefs really actually provide the opportunity for taxpayers to reduce their tax burden. Today we are going to look at the corporate tax reliefs, or reliefs that apply to corporate institutions. And the first one that we'll pick would be what we call the fresh graduate incentive or relief. So as a business entity, if you recruit or engage fresh graduates, people who have just finished school and they are part of your workforce, the tax law actually gives you a relief for engaging or employing these people. And I must say that the tax law, gives this relief because you want government want to drive particular agenda in some industries. So you realize that some of the reliefs that government gives to the companies are to encourage investment in particular industries, sometimes to encourage a particular behavior. So for the fresh graduate incentive or relief, for instance, is targeted towards businesses who, for some reasons or the other, they engage fresh graduates in their business. Now, if you have 1% of your workforce being fresh graduates, you get a relief of 10% on the salaries of such fresh graduates. Now, you see, if you have your financial statement, you have your revenue and you have your expenses, and that comes to your gross profit, and on that you pay your tax, your profit before tax. On that you pay 25% tax. Now, within your expenses is salaries. Now, what the tax law is saying that if you have 1% of your staff or of your workforce who happen to be fresh graduates, you get additional 10% relief of salaries that you pay to them. So assuming the salaries you pay to the fresh graduate is, let's say, maybe 100,000 cedis, that 100,000 is an expense, so it's deductible. So you take it out of your income, and the difference is what you pay tax on. But the law is saying that because you have 1% of your workforce being fresh graduates, that 100,000, you get an additional deduction of 10%. So you get an additional deduction, so additional of 1,000 out to the 10,000 out to the 100,000, and then you deduct. So in effect, you have a total deduction of 110,000 to deduct.
Because you employ
fresh graduates. So our call to the business community is that as you plan for next year, plan towards also bringing in some of the fresh graduates. Now, who qualifies as a fresh graduate? You have to be educated in a recognized tertiary institution in the country. So if you are educated somewhere else, you will not qualify for this.
It has to be in Ghana.
It has to be a recognized tertiary institution in Ghana.
You can't go to Georgetown or Yale and come here.
No,
and
they can't
enjoy it.
Yes. Then also,
no shade, no pun intended.
No, at all. Then also, the fresh graduate also refers to a person who has graduated in a tertiary institution for the first time. So, I'm sure you have several degrees. If you decide to go and take another degree today, you will not qualify as a fresh graduate. Although you might have graduated today.
It doesn't count.
It doesn't count. It should be your first tertiary education. Now, if you have about 1% to 5%, but not more than 5%, you get 30% deduction of the salaries that you pay to these people.
That's significant.
Yes. And then if you also have more than 5%, that qualifies you for additional 50%.
50%?
Yes. So this is quite, important for businesses to look at. If you're an SME out there, and you are looking at ways to improve your cost and also ways to contribute to society and to Ghana and to reduce the burden that we have, you need to look at this particular incentive and say, how do I make sure that I bring in additional people but get some relief for it? And I think this is one area that we need to look at.
Because I'm thinking about the respective dynamics of having a relatively young workforce, and let's say fresh graduates. Depending on your field of endeavor, you may require some experience and some expertise at some level.
Sure.
But assuming that you're even doing entry level for a significant number, let's say up to that 5%. First of all, your overheads are reduced because entry level commitments on remuneration, depending on the job role, may be slightly lower than otherwise. Yeah. So I think it's an interesting conversation to have.
Yeah, but I think the other thing is that government also recognizes that when you have fresh graduates, of course, there are some costs that come. Training costs and all that. So I think some of these incentives is also to try to, give some room for the businesses also to more like defray some of the costs that they incur.
But this is cost that would have been incurred otherwise, regardless.
Yes, even
if you were not getting relief, you would still train these people.
You still train them.
So
train them. So that's the important aspect of the law how the law tries to give you some room to operate as a business entity. Now, moving to that is one area that I see it very exciting, very interesting. What we call the young entrepreneurs. So the law actually makes some provisions for people who are young and want to venture into entrepreneurship. And the law defines a young entrepreneur as a person who is not more than 35 years. If you are such a person and you go into business, and the law specifies specific categories of business that you can go into, you have tax exemption for 5 years. So if you are into any of those businesses that I will mention, then of course, if you are 35 years and not more than 35, your operation will be exempted from tax for 5 years. So if you are into ICT, manufacturing, agro-processing, energy production, waste processing, tourism, creative arts, horticulture, or medicinal plants, anybody who is 30 years and below 35 years and into any business of this kind will have a tax exemption for 5 years. So for
tax exemption of what percentage?
Exemption, you are not paying tax at all. I mean, not all taxes, but this is corporate tax. So when you employ,
I'm smiling because a few people have come here on the show, Masterclass, in the Startup Dialogue series, who are entrepreneurs on their own, and I've mentioned some of their names today. I don't know if they are below 35 years, but does this law take retrospective effect? If I'm 36 and when I was 31 I started it, can I go back?
No, this is for people who are below 35 years.
So it doesn't take retrospective effect?
No, at all. It doesn't.
Wow.
I mean, you could only do that if you file your returns. So if you file your returns in arrears, okay, then you will say that, okay, those years I didn't take advantage of this, so I won't take advantage. But of course, as I said last time, filing your returns late also comes with penalty implications.
So by the time you finish, they would have negated it.
Of course, it depends on what you have in the kitty. So those are the. I mean, that is so. If you are a young person thinking of venturing into such an area, I mean, what we are saying is that if you go into ICT, manufacturing, agro-processing, tourism, medicinal plants, horticulture, I mean, you get that exemption. And that is not just the end, but the tax law is then again saying that after the first 5 years, you still have some concession to say if you operate for the next 5 years at some specific locations, your tax rate is reduced. So currently the corporate tax rate is 25%. If you're a young graduate, if you're a young entrepreneur, after the first 5 years of your exemption, if you operate within Accra and Tema, you pay tax at a rate of 15% instead of the 25%. If you also operate in other regional capitals outside the 3 northern regions, so that some maybe around Koforidia, Kumasi and all that, if you are operating there, your tax rate comes to 12.5%. If you're also outside the other regional capitals, in this case, in Koko, Somenya, and other places, your tax rate comes to 10%. And then if you are within the 3 northern regions and you are classified as a young entrepreneur, you then pay tax at 5%. So it's very important. I mean, as we look at entrepreneurship and look at what we want to do, it's important that you reach out and get advice on areas that you can actually get exemptions for your business. If you don't do this and you go ahead and pay the tax to the government would definitely take that.
But let me ask, and I was going to hold my questions for later, but really, are the tax authorities sharing this education as strongly as they're sharing the other information that says you must pay your tax?
I think over the years, the GRA has done a lot of work when it comes to tax education. But I think they still have more room. I'm not
calling the GRA out this afternoon, but I'm saying that, you see, you spoke about one of the benefits of personal reliefs being tax compliance.
Sure.
Now, already there's a lot of tax avoidance and tax evasion that's going on, which is criminal anyway.
Yeah.
But I'm saying that to encourage a young professional from school, 30 years, who wants to do the business, like an M. Sims or like Noesa Shoes or like any of the guys who have been on the show, they want to do the right thing from the get-go.
Yeah.
But they don't know this.
Sure. Yes. So like I said, I mean, the situation before is worse than we are seeing today. The GRA has been on a journey. And if you look at what they've done in the past, today, if you go on their platforms, and in fact, they're actually present on LinkedIn, on Instagram, and other pages. They actually give tax. In fact, last week I was quite surprised after our discussion. I think just about 2 days, I also saw them posting personal reliefs.
Right.
And I was like, oh, wow. So they are also following what's going on.
Good afternoon to you, GRA, if you are listening. You're doing a great job, but please talk to us more about tax reliefs so that you can reverse engineer compliance.
Yes. So I think there's more to be done. They still need to do more education. But for us in KPMG, we also see tax education very important. And any opportunity we get, we try to educate the public to make sure that they are tax compliant and what the tax law provides, any benefit, any relief, we try to highlight it so that you can comply within the law and also make some business for yourself. Now, moving away from the young entrepreneur, so that's one area I want to call upon everyone. You are young there and you want to do business. This is one area that you can consider, and then come together, joint venture, partnerships, and just go into this, and I'm sure you'll be fine. Now, there are other tax reliefs or incentives that are given to businesses just because of where they are located. And basically, this relief is available for manufacturing concerns or manufacturing businesses. Now, so if you are a manufacturing business and you are located at any regional capital apart from Accra and Tema, because now you hear about Greater Tema and then Greater Kaswa and Greater Accra. So if you are outside any of the regional capitals apart from Greater Accra and Tema, you have a tax rebate. Your tax rate is 18.75 instead of the normal 25% that you pay. And this is not because of your age, but it's because of the business that you are engaged in.
Your location.
So yes, the manufacturing business and then your location.
So sector of business and location.
Sector of business and location. So you should be a manufacturing business. If you are into any other business and you are located where I've mentioned, you will not get this. You have to be a manufacturing business, and then you get 18.5. So it's actually 75% reduction on the tax rate of 25%. If you are located elsewhere within the country, apart from these two places that I've mentioned, your tax rate is reduced by 50%, and then your pay tax at 12.5%. So if you are a manufacturing business and you want to look at taking advantage of some of these reliefs, our call to you is look at other places apart from Accra that you can also operate and take advantage of these reliefs that the government has made available in our tax law. Now, there are other incentives in the tax law that we call temporary tax concessions. Now, they are temporary because the concessions that you get do not last forever. So these grant businesses tax relief such that their potential tax payable is reduced, minimized, or sometimes you don't even pay at all. Now, in the past, if you are enjoying any tax concession, then your tax rate effectively is actually 1%. But there was a recent amendment that actually changed that to 5%. So if you are there and you fall within this category, I want you to be aware that it's no more 1%, but government has actually changed it to 5%. So if you fall within the temporary concessions, which I'll go through shortly, your rate is 5% tax.
Right.
Now, governments do some of these things, as I said earlier, to drive or to encourage investment in particular areas of the economy. Okay, and also to encourage investment in specified areas so that, we get more, for example, in agriculture. Government will do this so that we produce more in the country. There are more than 10 concessions, if you look at our tax law. There are more than 10 concessions that people can actually take advantage of. But to take advantage of these concessions, there are other rules that governs concessions that you must be aware of. So it's not just that they are there, you can take. So any person who is entitled to concession or is enjoying the concession cannot transfer it to an associated entity.
They are not
that is a different business. So for example, let's say that I'm into agro processing and I also provide some services. Now the tax law says that once I'm in agro processing, I get a tax concession of 5 years. So for 5 years, I'm not going to pay tax at 25%. My tax rate will be 5%. Because I also do some service business, I can't transfer the concession I have to that service business. That service business falls outside the concession. So that's clarity that we must be aware of. Now also, what we've also realized that some businesses, after they've enjoyed the concession, some concession can go as high as 10 years. After they've enjoyed it for some time, when they see that, I'm 8 years within the range, they now transfer the business and move to another entity. The tax law says that when you transfer the business to another person, that transfer would be a continuation of the concession. So it will not be a commencement. So that's very clear. You don't want to be so smart to say that you want to now evade the tax. The concession is there. You've done 8 years. Calm down and do your 2 years, and make sure that after the 2 years, if you fall within another category, you get another concession, but then you pay tax at a higher rate instead of the 5.
A bit like the remaining lease on land.
Sure. Yes. Then again, one thing that we must know is that despite the concessions that you enjoy, you are still required to pay some minimum tax to the government. Because again, although you are relieved of your taxes and all that, government is still incurring expenses, capital expenditure. For example, making sure that the roads are done, making sure we are building more schools, making sure we are building health facilities. If you're a business, definitely you enjoy from one of these. If we have schools, the employees you employ will be coming from school. If you are a business in maybe some of the hinterlands, you need the roads to bring your product. So definitely you must pay some taxes so that government can do some of these interventions to support the business community as well.
But I was just going to say that I suppose that the indirect taxes already do a good job at taking these taxes, don't they?
Well, so yes, the indirect taxes are there, but you see some of these concessions, for example, in the agri sector, some of the products really are exempted from
tax,
from the indirect, so like from VAT, for instance. Yeah, so I think the direct tax comes into pushing government a bit to also get some revenue to do some of the interventions that they have for the economy. Now, when we look at the temporal concessions, it's important to list a few for our viewers and our listeners to take note of. So, for example, if you are a business engaged in 3 crops, and what do I mean by 3 crops? So you are into coconut production, coffee, oil palm, rubber, shea nuts. If you are into this category, then you have a 10-year tax concession. What that means is that for the first 10 years that you operate, you are supposed to pay tax at 5%. In fact, the idea is that you don't pay tax, but then your tax rate is reduced to 5%.
Right.
Now, one will ask, when does this start? Is it when I start planting the coconut, so that by 10 years time, when the coconut is now fruiting, or 5 years or 2 years, then I've lost 2 years, I've lost 3 years, or I've lost even the concession. This particular one is available when you do your first harvest.
Okay.
So if you're a coconut farmer, you are a coffee farmer, you are oil palm, rubber, shea nut, the first time you do your harvest, so if you use some technology to fast track the process and you get your first harvest, then the 10 years starts, it kicks in.
Right.
If you're also into livestock farming, you have 5 years from when your business commences. And I believe you all know what livestock is. So livestock is, farm animals that you produce, you grow on a farm. So we can talk about poultry, birds and all that. If you are into that business, the first 5 years, you are tax exempt. But any other period after that, you have to pay tax. And that first 5 years is when your business actually commences. So for this particular one, it's not tied to harvest, but it's actually tied to when your business commences.
So if you've registered the business into this sector and you haven't started, anything is lying in your drawer, your 5 years is counting.
Well, so I think in the past we used to have what we call a certificate to commence business. So when people are ready to commence, they go. But now we don't even have that certificate again. But what I would think is that if you've actually not done anything, you need to maybe regularize that process by writing to the GRE that I registered this business this particular year, but I've not had any activity. Today, I'm starting operations, and I want you to give me some kind of comfort through a letter. And anytime you write to a GRE, they actually respond to you, and they can say, okay, based on the fact you've stated, we can send some people to come and do verification and be sure. Some of the things are not really black and white in law, but again, when you write to the GRE, they'll be able to advise you on what to do. If you're also into waste processing, and we've seen that a lot now, people are processing a lot of waste. We see the bottle recycling, the bottle water, the sachet water. We see people recycling all that. If you recycle plastics, polythene, and any other thing that you recycle, either through agriculture or through commercial means, you get a tax concession for 7 years. For 7 years, you will not. I mean, in the past you will not be paying tax, but now what the law is saying that for 7 years you will pay tax, but at a reduced rate of 5%.
Okay.
And as I must say that the GRA is actually working on a guideline for this particular sector, because I think a lot more people are going to this area, and there's when people start going to the industry, then the nuances and the challenges begin to come out, and therefore you need to get some guidelines on what you have to do to qualify.
And I suppose people are also going there because the conversation on reducing our carbon footprint, sustainability, which is becoming a key part of our reporting and our language on the management terrain, is coming to the fore.
Yes.
So now there's a lot of attention, even when you seek loans and all of that. Now there are special concessions for people who are in that sector.
Sure.
So I agree with you that there's a lot of traction in that space, and clearly, therefore, the laws have to also be looked at.
Yes, and for me, sustainability is one area that is so dear to me. So I've been following the conversation. So in Ghana, for instance, the Bank of Ghana issued what we call the Sustainable Banking Principles, where they expect that even for banks, when you issue loans, you must follow some particular process to ensure that businesses who are taking these loans from you are operating sustainably, and they are following particular principles.
Yes.
If you look at the Ghana Stock Exchange, for instance, they have also issued what they call the Ghana Stock Exchange ESG manual for entities that are listed. I don't want to go into it's one area that I
can see that you're passionate
really
about it. It's actually quite a big conversation these days. Maybe we'll find time on the show and bring you back.
Of course.
To talk about sustainability.
Yes, we can do that.
Yes.
So the recycling sector, I mean, if you are in that sector, we are saying that the tax law gives you 7 years tax concession, but within that period you are supposed to be paying 5%. Now the beauty of the whole thing is that before you pay 5%, it's actually on your profit before tax. So if you report a loss, and not that you are reporting loss, by making sure you don't pay tax, but you are reporting loss because your cost is more than your revenue.
Yes.
And therefore a loss occurs. If you get that loss, then it means that even the 5% does not even apply to you. And that brings me to the next discussion on what we call the carryover of losses. So another incentive that government has made available through the tax law is what we call the carryover of losses. So if you're a business and you're operating and you make losses, the law allows you to carry over your loss for 5 years. So let's say year 1, you have a loss of whatever amount, 1 million Ghana cedi. The law says that loss can be carried forward for 5 years.
As part of your financial reporting.
Yes. So in accounting, they will look at what we call deferred tax asset on that particular law, because the loss is actually going to give you a tax benefit in the future. Because next year, if your loss for this year is say 100,000, 200,000, I like using rounded numbers because it's very easy to work with. So if your loss, for instance, is 200,000 this year, and next year you make a profit of 200,000, what it means is that you take that loss out before you pay tax. And once that comes to nil, then there's no tax to pay. So that's what the accountant will say, that is a deferred tax asset. So that loss you are carrying forward today is actually an asset that you get benefit for in the next year.
Now, won't businesses exploit it?
Well, you can't exploit because it has to be an actual loss. And there are actually guidance and rules regarding the losses. For example, you cannot cross losses. So if you have a loss from investment, you cannot cross to come and take a loss from business. So there are clear guidance as to how these losses can actually be carried forward. So what I'm saying, in the past, the rule used to be that if you are in some sectors that we call priority sector, including mining, manufacturing, agriculture, and I think ICT also, then you are supposed to enjoy 5 years loss carry forward. And then if you are in any other sector, then you do 3 years. But the law has been amended to say that any business operating in Ghana, whether you are in a priority sector or not, if you make any loss, that loss can be carried forward for 5 years. And I think these are all things in the law. These are all important aspects of the law that businesses must really be concerned with. You have to know, because once you know these things, at least you know that there is some room for your operations. If you make loss, that's not the end. You can carry forward that loss. Next year, relieve yourself of any potential
I'm going
tax?
to recommend to our listeners and our entrepreneurs and our business owners that as part of your planning for next year and your strategy, arrange a training with one of these top 4 advisory companies and let them come and train not just your finance staff, but your management staff on taxation and the benefits. Because apart from the finance managers and a few people who should know, I don't think that a lot of people know, even business owners know about this release. Because one of the questions I was going to ask you, and maybe I'll just ask it and then we'll go for the break and come back, is that if a business owner is very good and therefore gets help to identify all the tax reliefs that they can access. They are young, they are under 35, they are business owner, they have aged dependents, and show up on every single relief they can get. It is possible for them to become completely exempt for a number of years, isn't it? You just hold that thought for me. If you just tune in, this is Masterclass here at your Superstation. We're here with Gordon Dardey. We're talking about taxation and our businesses in Ghana. We want to take a quick message from our sponsors. When we come back, we get interactive.
Your favorite on-air business development program, Joy Business Masterclass, is in session, and you can interact with us on Facebook via the Joy 99.7 FM or Joy Business pages. If you tweet, the handle is at Joy 997 FM or at Joy Business GH. Don't forget to hashtag JB Masterclass. You can also call us on 0302 216541 or send your questions and contributions through to the WhatsApp number 0551 111997, and our facilitators will address your concerns. Attention everyone, class is in progress.
Welcome back. If you just tuned in, this is Masterclass. Phone lines are now open. We're interactive. Numbers to call 0302-216-541. That's 0302-216-541. You can also send us a message on 055-1111-997. That's 055-1111-997. If you're driving, please do not text while you drive, because we definitely want you to arrive alive. But otherwise, send us a message on 055-1111-997, or pick up that phone, give us a call on 0302-216-541. Let's also remember that Goyle is giving away some fuel coupons to 2 lucky winners today, and you could be a lucky winner. So pick up that phone, ask us a question on taxation, and you could win for yourself some fuel. Numbers to call 0302-216-541, or send us a message on 055-1111-997. If you have any motor vehicle of any kind, then Goyle has some great news for you. What do you do when your vehicle stops or run out of fuel? Do you just stop anywhere? If that's what you do, then please don't do that anymore. Let us introduce you to the Good Energy family and why you must be a part of it. Goyle Super XP Ron 95 and Diesel XP are the best quality fuels with high performance in town for your vehicle. Goyle Super XP Ron 95 is a high-grade fuel sold at the same price as normal fuel. Goyle's Diesel XP is low in sulfur, making it an eco-friendly option for your vehicle. And with over 440 stations across the nation, we ask that you join the family that rewards you with quality for an energized driving experience. Goyle, good energy. Goyle, Yenara, Yedi. I've got my first caller on the line. Good afternoon, you're welcome to Masterclass. Your name and where you're calling from?
My name is Cynthia.
Good afternoon, Cynthia.
From Nungwa, Teshi Nungwa Estate.
How is Teshi Nungwa Estate this afternoon, Cynthia?
Very hot.
Okay, so Cynthia, you've won for yourself some fuel. I'm not going to disclose the amount so that people won't come chasing you. But when I'm done speaking to you, please stay on the line. My production crew will have a word with you, and you will be able to come and pick up and redeem.
Oh, really?
So congratulations, you have won fuel
Thank
from Goyle today.
All right.
Right. Please go ahead with your question, Cynthia.
Yes. So my question is to the when you declare a negative, you declare a loss. If you do declare a loss for, let me say, 2 consecutive years, and you make a profit in the 3rd year, and yes, so that profit is not enough to be able to pay the negative balance of tax that you are supposed to pay. In that instance, what do you do?
It's a very good question, Cynthia. Please keep listening. We will answer that question immediately.
Yeah.
Yes. All right. So thanks very much, Cynthia, for your question. So if you make a loss for year 1, year 2, the rule is actually, first in, first out. So if you make profit in the 3rd year, we will still consider the year 1 loss. We'll net it off against the profit. That means that the loss that will be carried forward will now reduce. So practically, let's say that your profit for the year 3 is 200,000. Your loss from year 1 is 500,000. Year 2 is, let's say, another 500,000. So 1 million loss. The profit is 200,000. We net off against that. Loss carried forward will be 800,000. So for subsequent years.
So another point that you've made in there is that full value of loss will be exacted to the extent that the profit can cover it.
Yes. Yes.
Okay.
But what it means is that the first year loss, it will be counting. So 5 years time, that loss will go off. You can't use it again.
Right.
But the year 2 loss will also be in year 4 by that time, in that order, and then it continues like that.
We are learning tax. Okay, phone lines are now open. I've got a comment on social media. This one is from Dada Boat from North. I get dizzy, Dada Boat, with this your direction. From northeast of West Hills Mall. I'm sitting in a chair, but I'm getting dizzy. He says, I'm listening to you and your resource person. And I had the same question, Dada Boat. You must have been in my mind. He says, does the national service personnel, or do national service personnel form part of fresh graduates? If yes, does one enjoy the same rate as an NSS person and a fresh graduate after national service? Okay, I have another caller on the line, so let's take note of that question. We'll come back to it.
Sure.
Good afternoon. You're welcome to Masterclass. Your name, where you're calling from?
My name is Larry.
Right. Larry, where are you calling us from this afternoon?
Lashivi.
Brilliant. Larry, congratulations. You won for yourself a fuel coupon from Goyle. When we're done speaking, please stay on the line. My production crew will have a word with you, and then you can redeem your fuel coupon.
Okay.
Right. Talk to me, Larry.
Yes. The issue about carry over your losses. Yeah, I want a little bit expansion or explanation on that.
Okay. All right. Larry, please stay on the line, and my team will speak with you. He wants to understand what he means when he says you carry over your losses. I've got another caller. Okay, let's take that one, and then we can answer. Yeah. So, carryover of losses, please make a note of it for me, and then we can answer that about question as well. Good afternoon. You're welcome to Masterclass. Your name and where you're calling from.
Good afternoon, boss. This is Ajima Joseph from tonight, sir.
Oh, my brother, how are you doing?
I'm doing well, brother.
Brilliant.
You're also doing wonderful.
Indeed. Talk to me, Ajima Joseph.
Yeah, my question is with the farming issue. If I'm a farmer, do you look at the size of my farm before I start paying the tax? Secondly, if I make it a business that I've employed employees that I'm paying them, do I have to pay tax for them? And at what point in time do I have to pay for them? And how are GRA checking that they will make sure I pay tax for my workers in the farm?
Right, Ajima Joseph. Please keep listening. We will try and answer your question. So maybe we'll start from Dada Boat's question.
Yeah.
Yes.
Yeah. So thank you very much, Dada Boat, for your question. In terms of carryover of losses, maybe I'll just briefly do that. So what we are saying is that the law allows every business operating in Ghana to carry over any loss that they make for a particular year for 5 years. How do you make a loss? It's not an artificial loss, but it's a loss from operation. So you have revenue, you have cost of sales, you deduct, you get your income for the year. If you have any overheads, you take it out, and then you get profit before tax. That amount, if it's not a profit and it's a loss before tax, that loss is what we are saying can carry forward for 5 years. What it means that in year 2, if you make a profit, the loss will be offset against that profit, and the balance is what you pay tax on. If the balance is also a loss, then that loss can be carried forward again into the next year. So that's basically what. But if you still need some clarifications after the session, you can actually call us and we will give you more.
We'll put some numbers out like we did last time, and then.
Now the other listener also asked the question of the size of the farm, whether that is considered. So of course, what we are talking about is farming business. So we have people who are doing some small maize. I mean, at the back of their house, they are doing some small goat rearing at the back of their house. Those ones are not businesses. But you have set up yourself doing business, you've registered, you are operating, you have a farm business and all that. You will be qualified to go through. Now, he's asking whether PAYE and other taxes will be covered. The exemption is only for the corporate tax. And it's not even just 100% exemption. What really is that you have a concession for not paying tax for a particular number of years.
Right.
But you pay tax at 5%. Now, your PAYE must be paid because that is an employee tax. So it's not a company tax. That is tax that your employees must pay. So you have engaged somebody on your farm and you are paying them salaries. Their tax is required to be paid to the GRA. The other side is how does GRA monitor to ensure that people are paying these taxes. What I will say is that if GRA has not come to you, don't think that you will not pay this tax. Because the day that you will need to do something and you need your tax clearance certificate, you will be required to.
Otherwise, they will just show up.
And when they show up, the issue is the penalties may even be more than your taxes.
Exactly.
And that will not be something that you want to entertain.
That one, they won't
So
just
encourage everyone to
losses. They'll be carrying over more than losses.
Yes.
I think there was a question on fresh graduates, whether national service personnel qualify as fresh graduates.
So you know, if you're a national service personnel, you are not an employee. You are a national service person. So that period is actually a period that you are serving the nation.
Okay.
And therefore it's the same. But after that period, then you're a fresh graduate. So if anybody engages you after that period, then they can actually take the benefit.
Okay, so I had a question here from last week, and I suppose that you shared something today that sort of clarified it. It says that, why does it appear that tax exemptions are given largely to foreign companies and not Ghanaian companies?
Well, so I think it's very clear on this discussion today that it's not only foreign companies that have exemptions. And I must say that on this platform, I must use this platform to say that government has actually passed what they call the tax exemption law. And that law is actually going to regulate exemptions in this country. But also to say that exemptions are not available for only foreign companies. If you are a local business, as I've said, the different industries I've already mentioned, if you fall within any of these categories, you have some exemptions and you have some concessions, you have some reliefs that can actually reduce or defray your tax obligations.
Let me ask this last one here. What is the difference between tax avoidance and tax evasion? And are they both illegal or not?
Well, so tax avoidance is actually more of a tax planning issue where you plan your taxes within the tax law. So, for example, as I've already mentioned about the tax, the carryover of losses, for instance, you've made some losses and you want to carry forward those losses such that it will not impact your profit for the next year. Your profit next year, do not pay tax on them. That is a way of planning your taxes. Or, for example, you realize that because you have some losses, you have some capital investments, you have some capital assets that you have brought in. If you bring all these capital assets into the year, what it means that you also get capital allowance, and that capital allowance will add up to the losses for the year, and the loss will become more. And therefore, you can now look at how do you plan your taxes such that you don't end up getting so much loss that you lose
out of pocket.
So you see, you can plan it such that those assets may not come in. They may not be released into assets. If you have enough assets to operate, you can hold them in capital work in progress until you really need them to do your operations. Then you bring it. So there are different things you can do to actually plan. That is planning. That is not tax evasion. But tax evasion is where you know that you are going to undertake a particular transaction to not pay tax. To not pay legitimate tax. So, for example, as I did mention under the concessions, you have operated for 8 years as a 3-crop farmer, and then within 8 years, when you have 2 years to go, 9 years, then you decided to go and register another business and just transfer and say this is a new person. That is tax evasion.
Right.
And the law is saying that if you do that, you cannot enjoy the concession. You have to continue as year 9. So that is the difference.
Right. I'll come back to you for final words, but I did mention at the beginning of this show that today's show was the last one for the business year 2023. So we just want to take a few minutes and acknowledge a few people who have been here on the show and helped Masterclass to come to you throughout the year. The first set of people we want to acknowledge are you, our cherished listeners. Thank you so much that you've been here every single time we've started Masterclass, and to you we say a big thank you. We are because you are Ubuntu. We also want to say a big thank you to all of our cherished resource persons who have come through. I just ran through the list very quickly. In January, we did Getting Your Finances Right with Isaac Okwe Alote. In February, we had Akosia Ajiman Mark Okine, who talked to us about mental health in the workplace. We also had Dr. Victor Abe come through to talk to us about leadership in turbulent times. Then we had Joyce Sika Chum talking to us about coaching, women-centered coaching, and quantum growth. We had Kobe Spikey, our very own Kobe Spikey, who came to talk to us about artificial intelligence and business. And then we had Edward Asari talk to us about social media marketing. We had Martin Atafin come through in August, and he had a rather interesting conversation integrating DEIB in our strategy, diversity, equity, inclusion in our strategy. And then we started a startup dialogue series here on the show. We were privileged to have Boahima in team of NutriHealth Foods and Beverages. We had Yusuf Mezongo Jr. from Maison Yusuf. We had Emmanuel Okeleji from Seamless HR and Akosia Sechi Ejekum from Nuesa Shoes. And then, of course, we had Abdul Latif Abubakar, who was here to share with us on stakeholder management. We also had Ibo Richardson come through very briefly, talk to us again about AI and business. And here in this month, November, we're talking about taxation and business. Gordon is here with us in the studio. To all of you, I actually had this thing written down for me yesterday. I want to say thank you in Ewe. And I was asked to say Mauneirami. I hope I have said it well. Thank you all very much for helping us. And then to my production crew here in studio, I want to say a big thank you to my boss, Head of Joy Business, Nixon. I want to say thank you to all the Joy Business team, each one of you. And also to my producer extraordinaire. For the many years we've done Masterclass, she's refused to come on a microphone, but she shows up every now and again. So for those of you who know Sarah Amele Ejosu is our producer for Masterclass. Abeku Sankofi, engineer number 1. Abeku, thank you so much. He's always here with us in the studio, smiley face. Anita helps us with the phone lines. Anita Tay, Christabel Johnson as well. And then we've got Oliver. I hope I pronounce your name well. Oliver Fagnon. He helps us with the live stream and media, social media. So does Chris Kumi. And Chris likes to be called Crispy. He also helps us with social media. And then my dearest Sammy Forson, DJ extraordinaire, who always plays Hello God for me when I walk in here and I'm tense, calms me down. Sam, the love is deep. And Lexus, you always have an encouraging word for me as well. Sometimes he sits through the show to give me serious morale. And last but not the least, Daryl. Wow, Daryl is my brother from another mother, sits in for me as a bench sometimes. And also the entire Multimedia and Joy FM family. I want to say thank you to all of you for helping us to bring Masterclass to our various listeners in this year. Thank you so much, and shalom. Hopefully we'll see you. Let me wish you a Merry Christmas in advance from Masterclass and a Happy New Year. Hopefully we'll see you on the other side in the new year. But rounding up, for those who need more answers on the conversation on tax, I know we're not able to exhaust it, so we may bring Gordon back in the new year, God willing. You can please call these numbers to get help on tax consulting. That's 0302 770 618. That's 0302 770 618. And that will go straight to KPMG offices, and there'll be somebody there on the other side of the line to help. You can also call 050-132-4230. That's 050-132-4230. So, Gordon, thank you so much for coming through. Final words. You get to say the final words on behalf of all the resource persons because you're sitting here now.
Yeah.
What should we take away from this conversation?
Thank you very much, Yaw, for having us, KPMG, here every time. I think this is not the first time we've come here. We came here about 2 years ago also to talk about taxes again. Yeah. And for us in KPMG, we're always there to inspire confidence and empower change in every business and every society. And it's always an opportunity to partner with your team to bring knowledge to businesses. And to every SME out there, we want to say that we want to encourage you to always take opportunity of the platform, of the Masterclass platform, because you get free advice, free consulting, and that will help you to move your business to the next level. As we go into next year, we wish you the best, and we encourage you to listen to Masterclass and participate. And everything that is shared here, it will actually benefit your business. And to my colleagues in KPMG, thank you very much for the support. Thank you very much to Mr. Kofi Frimpong Kore for always releasing me to come and do this.
Indeed.
Mr. Anthony Sapon for also releasing me to do this. And then Emmanuel Asari, who is in the studio today with me.
Right.
Thank you for the support and all that you do for me. Thank you very much.
Thank you so much for coming through. This is how we bring today's edition of Masterclass to a close. Masterclass will be back on your radio again in the new year. Until then, we say have a Merry Christmas in advance and a Happy New Year